Most people think choosing a credit card is simple, that you just compare rewards, percentages, maybe the design, maybe the brand name, and then pick the one that feels premium. But the hidden truth is that some cards quietly cost you money while making you feel smart, and others quietly help you save while never looking flashy. And the real mystery is which side Apple Card and Capital One actually fall on when you strip away the marketing. Welcome to Meta Economy Lab, where you can learn and understand more about the economy and related topics, so you can subscribe to the channel for continuous learning. The battle between Apple Card and Capital. One is not just about two companies competing, it represents a much bigger shift in how technology companies and traditional banks are fighting for control over your spending, your habits, and your financial data. To understand this battle, we need to rewind to a time before Apple ever entered the credit card world, when banks dominated consumer finance and tech companies stayed on the sidelines, building tools but not issuing money. For decades, Capital One built its reputation as a data-driven bank, using algorithms and marketing science to design cards for different types of spenders, from beginners to travelers, to people rebuilding credit. Apple, on the other hand, spent years building trust, not as a bank, but as a lifestyle brand, selling simplicity, privacy, and seamless design, which laid the groundwork for something much bigger. When Apple announced the Apple Card, it shocked the financial world, because suddenly a tech company known for phones was stepping directly into consumer finance, partnering with a major bank, but controlling the user experience. The promise sounded revolutionary. No fees, clear interest, instant cashback, and a card designed to be understood, not confusing, which directly challenged how traditional banks operate. Capital One watched this carefully, because it had already positioned itself as a consumer-friendly bank, advertising no foreign transaction fees, transparent rewards, and easy-to-use apps long before Apple arrived. At first glance, Apple Card feels futuristic, with daily cashback, real-time spending tracking, and an interface that feels more like a wellness app than a financial product. Capital One cards, by contrast, feel more traditional, with monthly rewards, multiple card options, and a structure that requires a bit more effort to understand. But here is where the contradiction appears, because simplicity can hide limitations, and flexibility can hide opportunity. And neither card tells the full story up front. Apple Card's biggest selling point is daily cash, where rewards hit your account instantly, creating a psychological reward loop that feels satisfying and immediate. That instant gratification makes people feel like they are winning every day, even when the total rewards earned over a year may be lower than other cards. Capital One often pays rewards monthly, which feels slower and less exciting, but the actual percentages and bonus categories can quietly add up to more value over time. Another overlooked detail is where you earn the highest rewards, because Apple Card pays the most when you use Apple Pay, subtly nudging you to stay inside Apple's ecosystem. That sounds convenient, but it also limits where you can maximize rewards, especially in places that do not accept Apple Pay or when using online merchants outside Apple's preferred partners. Capital One cards usually do not care how you pay, only what you buy, which gives users more flexibility across merchants, platforms, and countries. Then there is the issue of interest rates, which Apple proudly displays in a clean, transparent way, while traditional cards often bury in fine print. Transparency feels empowering, but the actual rates on Apple Card can still be high, and the ease of use can encourage carrying balances if users are not careful. Capital One is not innocent here either, but its wide range of cards allows some users to qualify for lower rates or better balanced transfer options depending on credit profile. One surprising pattern is how each company handles customer behavior, because Apple Card gently nudges users with color-coded spending, while Capital One uses alerts, tools, and educational prompts. Apple's approach feels friendly and non-judgmental, but it may not push users hard enough to change bad habits, whereas Capital One sometimes feels strict but more corrective. Another hidden layer is data, because Apple positions itself as privacy, claiming it does not track purchases for advertising, which appeals to users concerned about surveillance. Capital One, as a bank, uses transaction data to refine products, offers, and risk models, which can feel invasive but also results in targeted benefits and better underwriting. When it comes to credit building, Capital One has a long history of offering cards designed specifically to help users grow their credit profiles over time. Apple Card approves many users with decent credit, but offers fewer tools for structured credit improvement beyond basic usage. Travel is another major difference, because many Capital One cards include travel protections, insurance, and transfer partners that Apple Card simply does not offer. Apple Card is not designed for travelers, even though Apple users often assume premium branding equals premium perks. This is where marketing power becomes dangerous, because people assume Apple Card is elite, when in reality it is more of a simple, everyday spending card. Capital One, despite lacking Apple's brand glow, quietly competes with premium benefits at different tiers, allowing users to grow into better cards as their finances improve. The real winner depends on behavior, not branding. And that is the part rarely discussed in ads or reviews. If you spend mostly on Apple PE balances in full, value simplicity, and stay inside the Apple ecosystem, Apple Card can feel smooth and rewarding. If you want flexibility, higher long-term rewards, travel perks, or strategic credit growth, Capital One often delivers more value with a bit more effort. The uncomfortable truth is that neither card is universally better, but one is more honest about its limitations, while the other relies heavily on emotional appeal. As technology companies move deeper into finance, the future may bring more Apple-style cards that feel friendly but quietly limit choice. Banks like Capital One will likely respond by simplifying interfaces while keeping complex reward engines underneath. So here are 3 clear takeaways to remember. First, simplicity can cost you if it limits earning potential. Second, flexibility often rewards those willing to learn. And third, branding should never replace understanding. The warning is that as cards become more seamless and invisible, it becomes easier to overspend without noticing the long-term cost. If this comparison changed how you see credit cards, like the video, share your experience in the comments, and subscribe to stay informed as the financial world keeps evolving. Meta Economy Lab gives you new perspective to see and understand more about the economy and related topics, so you can subscribe to the channel for continuous learning.